Hello everyone, welcome to our channel StoxFactor. Hope you are doing well. In this weekly market analysis video, we are going to discuss very important factors which are going to weigh on the markets for the next week. And then we are going to look at the important levels for the Nifty and Bank Nifty for the next week. So let's get started. So first we are going to discuss the factors which are going to affect the markets next week. So let's start it one by one. So the first important factor that has already weighed on the market is the US jobs data. So we are going to quickly discuss what the job data for the January was. So as we can see here that there was a strong job posting and that was very surprising for the month of January, which the analysts didn't expect it, and it was higher than the expectations. So as you can see, the job posting was around 4,67,000 for the month of January, and you can see the job posting for the past 1 year, right? So there was a record setting spike in the coronavirus cases, but there was a surprising recovery also in the job market. So it means the US economy is becoming strong and more jobs are being provided in the US economy. So what this could lead? This is an important factor for the Fed to raise the interest rates because the economy is recovering, and that is evident from the jobs data. Now let us discuss the second most important factor, which is the US inflation data. So last week the US inflation data came and it was a record high since the past 40 years. So now we are going to see the US inflation data. So as you can see on your screens, the graph displays the inflation data for the past 1 year and January being the highest. So you can see a continuous surge in the inflation in US, which is very surprising, and now the inflation has reached to almost 40-year high. This is record high 7.5. This is not even in India also this much inflation. We are well within the 6% range of RBI. So now the US inflation is more than India. So this is very surprising for a developed economy. So this was higher than the expectations, which again will put pressure on the Fed, that is the Federal Reserve, to increase the interest rates more aggressively as they had planned before. So that's why these factors are weighing on markets and we are seeing huge selling or consolidation in the equity markets. Now let's discuss the third important factor, which is the geopolitical tensions. So as you already know that the Ukraine-Russia escalation has already been there, and recently on the last Friday that the tensions have risen further, and there are news flowing in that Russia has increased their troops near the Ukrainian border, and this has been an important factor on the last Friday, and that's why we saw a huge dip in Dow Jones after the Indian market closed. So we saw that at night the Dow Jones closed down, right? So this is another important factor. Now let's discuss the fourth most important factor, which is the crude oil. So crude oil prices are rising continuously. Now why they are rising? The reason behind the crude oil price rise is one very important factor for the rise of crude prices is the tensions with Russia. So this is the most important factor because Russia again is a producer of the oil, and this has led to the supply disruptions. That's why the demand is increased and the supply is not that much, which has again led to the increase in the crude oil prices. So this is another very important factor which is weighing on equity markets including India. Now coming to the last very important factor which has led to the fall in Nifty also, that is the FII selling. Now we have been seeing continuous FII selling and it is still continuing, and last week we have also seen huge selling by FIIs. So if you look at the FII selling data, you can see that continuously they have been selling for the last 5 months, and on the last week also you can see that they have been doing continuous selling, right? So this is another very important factor which has led to the correction in Indian markets. Now friends, let's also analyze the FII's derivatives positions. As you can see that on the last trading day, they have actually reduced their, or they have created net short positions on index, and you can see the future index long ratio is again below 50. It means they are now net short on index, right? Again you can see they have done huge call selling and they have also bought huge puts. Now why they have bought puts? Because they have hedged their cash market portfolio. As you already know that they have a huge exposure in the cash market, so they need to hedge their positions against any uncertainty, that is because of the global tensions. So that's why they have hedged their portfolio by buying more puts. So we can also see at the bottom table that they are now net short on index, and they have also sold on cash market, and also on last Friday they sold on the future stocks also. They have reduced their future stock positions also by slight margin, but still they are net long on future stocks as compared to the index. So on overall index right now they have created short positions. So we need to be cautious at this level. As you can see on Thursday, finally they came on green. They created net long positions on index, but on Friday, due to the news flowing in about the geopolitical tensions and also the weekend coming in, they again hedged their portfolio by buying puts, and they went net short on index. They cleared out their long positions and then created some short positions on index. Now friends, we'll also discuss important levels for Nifty for the next week. For that, we'll go to the index analysis page. So we are into the index analysis page now, and let's see the important levels for Nifty. So as you can see, we'll quickly jump to the option chain and we'll see the major support and resistance levels for the Nifty. So from the graph, we can see the first very important level now is 17,000, which has the maximum put writing as the first important level, and along with that we have also seen put writing on the last trading day at 17,000, right? So put writing is still going on. We haven't seen any put unwinding happening at 17,000, but we have seen put unwinding happening at 17,600, that is higher levels, and we have seen aggressive call writing up to 17,400 levels, right? So here now you can see that call writing has become more aggressive near 17,400 500 levels as compared to the put writing earlier, right? So now 17,200 to 17,000, this zone is likely to act as support for the Nifty, and if this level is breached, then the next level comes is 16,500. But for that we need to see put unwinding happening at 17,000 odd levels. So if the market comes near 17,000 odd levels and we start seeing put unwinding, so that will give us a signal that the support has started weakening, right? So in this way, we have to analyze the options data to identify the important levels for the Nifty. Now, if we look at the futures data, we haven't seen much action. Earlier, we saw few short positions and then we saw short covering. So no new long positions have been created on index, and you can see slight short positions created on index on the last trading day. And we also can correlate this data with the FII's short positions on index. So this is very much correlated that the net short positions were also created by FIIs. So it means FIIs are short on index. Now let's also quickly analyze the Bank Nifty levels for the next week. And for that, we'll quickly select Bank Nifty. So we can see from here quickly that maximum call writing, that is the maximum resistance, is at 39,000 and maximum put writing is at 38,000, right? Now if we quickly scroll down to the option chain directly, so we'll see that at 38,000 still there is a support level, and we can see fresh call writing which was aggressive at 38,500. So now 38,500, you can see a slight straddle playing out where put writers are still more than as compared to the call writers, but we have to watch this level importantly. If this level breaches, again we are going to slip towards 38,000 levels, and which is likely to act as a support. But if this level also breaks at closing basis, then the next important levels to watch will be 37,500, right? So now if we look at the option premium for the 38,000 price, so we can see that we can hover here and we can see the put price at 213. So around 200 rupees premium. So it means 38,000 to 37,800. So this 200 point range is likely to act as a support. And if the level breaks below 37,800, as we discussed, the next level to watch out for is 37,500. So in this way, we have to understand the important levels by combining the put writing levels and the maximum call writing levels with the premium of the option for that particular expiry. This will help you to gauge the important levels for the indexes. So friends, with this we come to the end of this analysis. Hope you like the analysis and the rationale behind the analysis. If you have any questions regarding this video, please post your questions on the comment section and we will definitely answer your questions. And if you have not subscribed to our channel till now, please subscribe to our channel so that you can get the notifications of such videos which we post every week, in which we discuss either the important levels for the Nifty and Bank Nifty, or we discuss the important levels for some stocks. So the main purpose for these videos is to provide you learning so that you can do your own analysis using our dashboard and identify high probability trades. And if you want to get the access of our dashboard, please visit our website www.stocksfactor.com. See you in another video. Take care and goodbye.